This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. U.S. crude oil exports rose more than expected last month, building on a record 4.5 million barrels per day in March, as Chinese refiners snapped up cargoes to meet rising fuel demand, according to ship tracking data and analysts. U.S. crude exports rose by 22% last year from 2021 after Russia's invasion of Ukraine led the European Union, Britain, Canada and the U.S. to ban imports of Russian oil and changed global flows. More recently, signs of an economic resurgence in China, the world's second-largest oil consumer, have drawn cargoes from Russia, and U.S. travel demand after the country rolled back its COVID-19 restrictions also boosted gasoline and jet fuel consumption.
Oil prices held steady during Asian trade on Tuesday amid mixed data from China, and as the market weighed forecasts of declining crude stockpiles with expectations of a U.S. interest rate hike. Brent crude was up by 7 cents to $79.38 a barrel by 0425 GMT, while U.S. West Texas Intermediate, WTI, crude rose 11 cents to $75.77 a barrel. Both benchmarks fell by more than $1 in their last session. China's manufacturing activity unexpectedly fell in April, official data showed on Sunday, the first contraction since December in the Manufacturing Purchasing Managers' Index.
Moving on to the top news in the energy sector.
The U.S. government could delay a decision on giving electric vehicle, EV, manufacturers tradable credits under a renewable fuel scheme, due to concern about legal challenges to the plan. Two sources familiar with the matter said. The plan would have given EV automakers such as Tesla credits for charging vehicles using power generated from renewable natural gas, or methane collected from sources such as cattle or landfills. The Environmental Protection Agency, EPA, last year recommended adding EVs to the U.S. Renewable Fuel Standard, RFS, which requires oil refiners to blend biofuels into the fuel they produce or buy credits from other refiners that do.
After nearly a century, oil output in the U.S. Gulf of Mexico is heading towards its peak, with new platforms providing a last hurrah as the region becomes a hot spot for burying greenhouse gases. Some companies, including ExxonMobil Corp., have been dumping assets in the Gulf, the nation's primary offshore source of oil, and are instead targeting capturing and storing carbon dioxide and other greenhouse gases underground. The region soon could become contested ground for oil, carbon sequestration and renewable energy, say analysts.
Next, we have the top news in metal markets.
Copper prices edged higher to hit a one-week high on Tuesday following a three-day weekend in London, though trading was thin as the Shanghai Futures Exchange remained shut for a national holiday. While top metals consumer China's financial markets will remain closed until Wednesday, the focus is on whether the U.S. Federal Reserve will indicate that it expects a pause in interest rate increases after a widely expected hike of 25 basis points to be delivered this week. 3-month copper on the London Metal Exchange was up 0.7% at $8,655 a ton, as of 0215 GMT, having reached $8,714 earlier in the session, its strongest since April 25.
Gold prices were flat on Tuesday, as cautious market participants awaited fresh cues from top central banks on their monetary policy plans, especially from the U.S. Federal Reserve. Spot gold was unchanged at $1,983.29 per ounce by 0528 GMT. U.S. gold futures fell 0.1% to $1,991. The Fed, which meets on May 2 to 3, is widely expected to raise interest rates by 25 basis points. Gold prices could move towards $2,000 if the Fed highlights recession worries and hints at a pause in the rate hike cycle, said Ajay Kedia, director at Kedia Commodities in Mumbai. We will now look at the top news in the agricultural sector. The U.S. Department of Agriculture on Monday rated 28% of U.S. winter wheat in good to excellent condition, up 2 percentage points from last week following much-needed rains in the plains, but still among the lowest on record for this time of year. The wheat ratings matched the average expectation in a Reuters poll of 10 analysts. Estimates had ranged from 25% to 31% good to excellent. A reduced crop from the world's number 5 exporter of the food grain leaves the world more vulnerable to shortages, given uncertainty about the future of a UN-backed deal to allow Ukraine to export grain through the Black Sea.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.